We have already seen 4 speakers to our left. Now, let's begin with the session. Everyone who remembers his own education remembers teachers, not just the methods and the techniques. The teacher is the heart of education system.
I'm very proud that I'm the student of the great human being, walking encyclopedia, CA Vijay Raja. Sir, your teaching lingers in my ears and mind in every work. You have transformed the lives of thousands of students and millions of beings, sir. You are the wisdom tree, an ideal person to around 40,000 students.
I now request Ms. Damini M. Bhatkal to escort our session chair, CA Vijay Raja sir, and student speakers, Ms. Shreya Shanai and Mr. Malampalli Rutvik onto the dais. Big round of applause. And welcome them with a flower bouquet. I now request Ms. Damini to take over.
Good evening, ladies and gentlemen. A non-performer performs. A non-performer fails to perform because of, but a performer performs in spite of. Today, we have amongst us one such eminent personality, CA Vijay Raja. He is a CA from ICAI, CS from ICSI, CMA from ICMAI, along with major ranks in his LLB and graduation exams. With a vast experience in various fields for over 25 years, he is currently a partner at Guru & Jana Chartered Accountants. He is well versed in corporate governance, taxation, IFRS, and has presented papers across India. With over 26 years of experience as a corporate trainer and a visiting faculty, he has published various books. Ladies and gentlemen, put your hands together and welcome CA Vijay Raja. Our first student speaker is Mr. Malampalli Rutvik. He has previously presented papers at various CA student conferences. He has undergone certification course on financial modeling and is a technical analyst. He is very passionate about finance and is currently pursuing an investment research analyst course as a part of CIIIA Switzerland. Please put your hands together for Mr. Malampalli Rutvik. Our co-student speaker is Ms. Shreya Shanai. She has been a diligent student right from her school days and has received many awards. She has won the Nitte Hachi Challenge on the topic Hunger for Justice and was also selected for a 15-day program called Catch Them Young, held by Infosys. She is currently pursuing her articleship in Messrs. Pai Nayak and Associates. Give a big round of applause to Ms. Shreya Shenoy. I request the session chairman, CA Vijay Raja, to take over the session.
Thank you. Thank you so much. I think the kind of love you're showing to me, Rajinikanth also thinks he's as in that, right? So I think there'll be a feeling of competition. I'll not take too much of your time. I'll straight away start off with what we are looking for. I just wanted to give you a quick overview of what is coming, what has happened. I will not be speaking on the topic what they will be speaking for you. I just wanted to give you a better view. Balcony, you're with me? Okay, very good. Okay. VVIP class? Okay, excellent. Excellent. Let me start off with the influence of technology. Now, as far as the influence of technology on law is concerned, that's the first thing I wanted to understand. It all started in 2006. In 2006, I'm sure my dear friends here would be aware about it, because of whom I'm actually standing here. So if you're all clapping for me, you have to first also clap for them, because they are the one who invited me. If they have not invited me, I would have not been here. Thanks to the CA Institute and the chairman. Thank you so much. So it all started in 2006. What happened in 2006 was, from manual filing, they went into electronic filing. That means in Kannada we say, A form hogi, E form bantu. So the A form went and E form came. So what happened was, they created something called as MCA 21. MCA is not middle class abbai. MCA refers to Ministry of Corporate Affairs, wherein they created MCA 21, it was launched. It is called 21 not because my age is 21, right? It's called MCA 21 because it's meant for the 21st century. So they created something for the 21st century, and they said we'll change from manual filing to electronic filing. That happened in 2006, which means if you can understand this, it's just a matter of 12 years. That means from 2006 to 2018, it's just been around 12 years, am I right? Now in the span of 12 years, look at the speed at which things have started to develop. From e-filing, they went into e-inspections, wherein everything is done online. You don't have to go to the ROC office anymore to inspect. And that's only a tip of the iceberg. And from there, we went to the next level. And what is the next level? Data analytics, and the future will be your artificial intelligence, which is nothing but the natural progression that's going to happen. Meaning what? If you see what's happening today, how things are working right now, there were certain loopholes in the provisions. What do you mean there were loopholes in the provisions? It was easier for people to somehow cheat and turn the law upside down and somehow ensure they get over from it. In fact, if you know about the Kelvin, a very popular character, he says, he reads one question. The question says, explain Newton's first law of motion in your own words. He thinks about it and he writes. You see? He writes and he says, I love loopholes, because the question was, write it in your own words. You said write it in your own words so I can write whatever I want. Now you can't tell me it is wrong. So he says, I love loopholes, and there's always a loophole in law. And because of like this, there are a lot of loopholes which was there. How technology has actually ensured that all these loopholes are plugged. Let's start with each one of them. If you see, there was non-filing for 3 years, if you're aware. There was a disqualification that was there. There's something called as related party transactions, which used to be a big issue, and DIN ensured that that was plugged. And because of DIN now, you're ensuring that these issues don't happen anymore. Working capital database for the government, which was difficult to find out, XBRL came into picture. XBRL ensuring that I can easily find out what's happening. Then as far as RTI is concerned, that is your right to information, your MC has ensured that everything has now become transparent, including your profit and loss accounts. Now it's not just your balance sheet, but also P&L account, which is now visible. So look at the change in technologies that has happened. What was supposed to be a loophole, now it's all got covered up. And if you're aware about this I'm sure many of you are very well aware of, about the fact that more than 3 lakh directors were disqualified, and there was a massive notice sent. How do you think ROC would have known that there are more than 3 lakh directors to be disqualified? It's all about data analytics. They used the concept of data analytics, and they found out saying that, okay, I can easily get the data very easily as to who is right, who is wrong, and what we need to do because of that. 2018 alone, look at the amount of changes that has happened in 2018 alone. Right from beginning, the first half of the year, there was strike-off provisions which came into picture. Then in June, we had the FDI reporting. Then in July, we are talking about foreign liabilities and assets to be disclosed. KYC norms came in August. And then we had the September EBIS for RBI requirements to be complied with. All in 2018 only. That was not sufficient. It continues. October, we had the beneficial owner provisions which came. Then November, we had the MGT 7 changes that happened. And December, the corporate KYC requirements, which of course is going to be effective shortly. Now look at the changes, the speed at which things are happening. Now all these things, why are they making so many changes? Okay, let's take a few examples about the latest changes. What was the need to make so many changes, including these ordinances that they passed? Now one of the reasons was simple violations to be made less punishable. Those who are aware, under the 1956 Act, the punishment used to be 50 rupees per day. Or aha, oho means it is 500 rupees per day. That's how it used to be. Now if you talk about it, they'll say, oh, well, let's start with 25 lakhs and go up to 5 crores. As a penalty. And that person newly who has started the business, if you tell him 5 crores, he does not even know how many zeros are there. And in his calculator, it's showing E. But he doesn't even know what's happening in this case. And it didn't stop there. Because of this now, all these changes what they're trying to make, they're ensuring that they're free of the court as far as taking up the cases are concerned. Now courts are more free. Why? Slowly we have moved from one to the other. I'll explain that to you in the next one. Some offenses were made into civil wrongs. From a criminal liability, we made certain things as a civil liability. From non-compoundable, that is from offenses which were compoundable, they were made non-compoundable. Those who don't know what is compoundable, if you sit on the compound, for offenses wherein instead of getting free boarding and lodging, that is your RFA, rent-free accommodations, instead of getting jail, you can ask for a penalty provisions, that is pay money and come out of it, is basically what you understand from compoundable and non-compoundable offenses. Now what if you see the latest amendments? You'll find everywhere the wordings have been changed, wherein they will say penalties in place of fines. Now why did they change it from penalties to fines? We all think that penalty, fine, we thought it's all the same. But then what they did was, they removed the word fines and put it as penalties in most of the provisions. What does this mean? What it would mean is, now the penalties will now be taken care by the adjudicating authorities. Now who are these adjudicating authorities? These are all like your regional directors, that is from the government department itself. They will take care of it. That means you don't have to go to NCLT anymore. You don't have to go to court anymore. Which also means what? Fines will be taken care by courts, whereas penalties will be taken care by the adjudicating authorities, that is your ROC, your RD, they will take care of it. That means when all these points happens, you don't have to keep going to NCLT or to a court. That's the whole difference between a fine and a penalty. Just to round up again, penalties, who can levy? And who will take care of all the adjudicating authorities like your ROCs and the RDs. Whereas when it comes to fines, it will be by the court of law. So what is the latest amendment? We remove the word fine and replace it with penalties, so that it will now be with RD and ROCs, and you don't have to go all the way to the court just for the sake of paying those penalties. And that's the change which has happened. Because of this, what's going to happen? The burden on courts will get reduced so that they can now focus on some important cases rather than just discussing about fines and penalties. That's one of the changes that has happened in recent ordinances which were passed. Just for your quick understanding, if you know what's an ordinance, why an ordinance was passed is because if Parliament goes on a holiday, but somebody has to pass a law, and it will be the President of India, who otherwise doesn't know what else to do. And he will ensure that he can pass it in the form of ordinances. When Parliament is not working, the ordinances are done by the President. That's how you get it as an ordinance. Look at this. The last question to ponder, changes to Companies Act from everywhere. Everybody thinks it is my property. You know, they feel company law, ye to apna hai. We can always change it. You know, it's like Lord Krishna. Every Gopika thinks that he is mine. I'm not talking about myself. Okay, right, okay. So look at that. We had section 154 of the Finance Act 2017, Finance Act 2017, which amended section 182 of the Companies Act 2013. Wow. Finance Act doing an amendment to Companies Act, because we had section 182 of Companies Act talking about political contributions, and we searched and searched and searched all MCA notifications. We don't know how it changed. Suddenly we saw the budget has changed company law. We were still wondering how budget started to change company law. Then we look into IBC, Insolvency and Bankruptcy Code. Insolvency and Bankruptcy Code changed a lot of provisions of Companies Act. That means what? If you want to see what is happening to Companies Act, you have to see around Companies Act also. So everybody thinks I can do whatever I want. Lord Krishna was tied up by everybody, saying that, I can tie him up, I can punish him, I can do whatever I want. So it's like that. Companies Act is like that Lord Krishna, wherein they feel that anybody can change anything. So this law is not easy to understand just like that. You have to keep your eyes and ears open all the time to see from where the changes are actually happening. I've made a quick summary of all these things about all the amendments. Those who want to refer to those summaries, you can refer to www.vijayraja.com, or you can go to the Twitter feed at Vijay Raja FCA, where you will get the entire summary of all the amendments that has happened in the recent past, and also the updates about what is required for your examinations. I'll not take too much of the time. I'll leave it to the speakers. So therefore, having said that, I think I can conclude here. So thank you, gracias, arigato gozaimasu, love you a lot. Still there? Yeah. What we'll be doing is, Shreya Shenoy will start with the presentation, and with the permission of both the speakers, wherever required, if something is to be added in between, like how all the movies that comes in TV, in between there's always be a commercial that comes in between. So like that, I may interrupt the two of you as a commercial break in between. Is that okay? Fine. So let's ask Shreya to start. Thank you so much. Love you. Can you please?
I sit and I ponder. I recount and I recollect. When, where, and how did this journey all begin? It was that one day in my pre-university college that I heard my lecturer speaking to her colleague about the newly introduced Companies Act 2013, which was the buzz topic at that point of time. That seemed quite interesting to me. I went back home and surfed the internet to know what this Companies Act 2013 is all about. When I read through the act, only few of it was understandable, and lot of the sections were way too complex. But as I stand here today, Companies Act has been a part and parcel of my life, and I can say all of our lives too. And in fact, it's revolving around our lives. ನಮ್ಮ ಚೆಲುವ ಕನ್ನಡ ನಾಡಿನ ರಾಜರಾಣಿಯಾದ ಕೆಂಪೇಗೌಡರ ಬೆಂಗಳೂರಿನ ಸನದು ಲೆಕ್ಕ ಪರಿಶೋಧಕರ ಸಂಘದ ಸಮ್ಮೇಳನದಲ್ಲಿ ಭಾಗಿಯಾಗಿರುವ ಸದಸ್ಯರಿಗೆ, ಗಣ್ಯ ಅತಿಥಿಯರಿಗೆ ಹಾಗೂ ವಿದ್ಯಾರ್ಥಿನಿಯರಿಗೆ ಕೃಷ್ಣನಗರಿ ಉಡುಪಿಯ ಶ್ರೇಯಾ ಶೆಣೈ ಮಾಡುವ ನಮಸ್ಕಾರಗಳು. Respected dignitaries and my dear friends, I am Shreya Shenoy from the temple town of Udupi, and my topic for the day is critical changes in company law with regards to directors and meeting of board and its powers. So, in the chartered accountancy profession, every alternate day you wake up and then there is a new notification, there is a new amendment, there is a new circular waiting to knock at your door. So these amendments are very crucial. They make the law in line with the current scenario. Let me begin with the Companies Amendment Act 2017. It received the assent of President of India on 3rd Jan 2018. When Companies Act 2013 was brought up, the constituents faced a lot of implementational difficulties to make this law a very comprehensive and a very relevant one. So to address all this, and after having received representations from companies and other entities, Companies Amendment Act 2017 was brought up. So Companies Act 2013 yet again has seen a new makeover. Let me first deal with the changes in Chapter 11, that is appointment and qualification of directors. Just like like how chartered accountants have their membership number, directors have their director identification number. You might have seen in every annual financial statement, you have DIN, director name and then DIN. So now after the amendment, central government is empowered to designate any other universally accepted number, say for example Aadhaar number or PAN number as a replacement to DIN. So in this case, if that happens, then the elaborate procedures to obtain DIN would be avoided. Coming to the area relating to definition of independent director. Before the Amendment Act 2017, the term pecuniary interest was not properly defined. It led to a lot of confusions and different kinds of interpretations. So now in the amendment, the term pecuniary interest is defined and it says it does not include the remuneration which is given to the independent director. And if, say, suppose there is independent director and he has some revenue accruing from the company where he is an independent director, in that case, if that revenue is less than 10% of his total income, then it does not form a part or it does not come under the purview of pecuniary interest. But if suppose it exceeds 10% of his total income, then definitely the independence of independent director is under threat. Next, I'll be dealing with the loans to directors, that is section 185. The whole of the section has been substituted under the Companies Amendment Act 2017. So I'll be giving you a brief of how it was previously and how it is now. In the erstwhile 1956 Act, this section of the law was a very liberal one. There were no proper regulations and restrictions. And this led to misuse of money, illegal or ineffective use of money. So to avoid that, in the Companies Act 2013, they made this section of the law very stringent, very strict, I can say. But in the Companies Amendment Act 2017, there has been a balanced approach. There are some areas where it is prohibitive and there are some areas where it is restrictive. So, when the loan is given to director, director's relatives, director of holding company, or to a firm where the director is a partner, in that case it is totally prohibited. Then there are some areas where it is restrictive. A, when the loan is given to a firm where the director is a partner. B, when the loan is given to a body corporate where the director has more than 25% of management control. C, when the loan is given to a body corporate where the board is accustomed to act as per the instruction of the director, in that case it is restrictive. So what is this restrictive? In that case, loans may be given to such entities if you fulfill two conditions. One, you need approval by way of special resolution, and two, it should be used for the principal business activity. Say for example, textile business or IT-enabled services. It should be used only for the core business of the company and not for granting any further loans. Coming to the definition of key managerial person, before the amendment it included CEO, CFO, manager, managing director and company secretary. Now in the amendment, they have included one more addition. It says the board can designate an officer of the company who is one level below the level of a director if he is in full-time employment as a key managerial personnel. Okay. Coming to this section, 164.2, which Vijay Raja sir has already talked about. So in this section, if the company fails to file annual returns or financial statements for 3 or more years, or if the company has not redeemed debentures or interest or not paid the declared dividend, in that case, all the directors of such company will be disqualified. So what's in the amendment? What's in the amendment? In the amendment it says, for the existing director, he will vacate his office in all companies except the company where there is default. And for the newly appointed director, he will get 6 months' time from his date of appointment so that maybe he can remedy the default. So that's why it's provided for. Then coming to section 186, loans and investment by companies. There are some exceptions given in this section, Under the Companies Amendment Act 2017, where the specified limit will not apply. Do we all know the specified limit under Section 186? Do we all know? It is 60% of paid up share capital plus free reserves plus securities premium, or 100% of free reserves plus securities premium, whichever is higher. So if you want to exceed that, then you need a special resolution. But in the amendment, they have given 3 situations wherein this limit will not apply. See, if suppose the loans are given to employees in the ordinary course of business, in that case, this limit will not apply. And if the loan is given to a wholly owned subsidiary company, even then this restriction will not apply. And 3, if the acquisition is made by a holding company by way of purchase of security of its wholly owned subsidiary, even in that case, this limit will not apply. So this is what is in the amendment. Okay. There are few small questions. These are actually amendments. I want you all to answer them. Very small questions. Are you all ready? Yes or no type questions. Okay. The first question, what about director sitting fees? Is it to be included in pecuniary interest? How many yes? A show of hands please. Yes? No? Wow, that's nice. Its answer is no, it's not to be included, just like how the remuneration is excluded. The second one, in case of resignation of director. Okay, so by the way, there was a recent notable resignation in the past week. Not any director of company, but a notable resignation. Yeah, it was RBI Governor Urjit Patel. So if suppose you can imagine that he is a director, in that case, will he be required to file the copy of resignation to ROC? Yes or no? So under the amendment it says it has been made optional. So the directors are done away with the burden of filing it to the ROC and giving detailed reasons of why they resign. So it's only on the part of company that it is mandatory that they have to file the copy of resignation form. The third one, directorships in dormant companies. Is it considered for calculating maximum number of directorships? Yes or no? Okay, yeah. Under the amendment it says directorships under dormant companies are not to be considered. Okay, in case of resident director, when you calculate 182 days period in a year, is it current previous calendar year or current financial year? I want someone to answer with the logic. Anyone? Previous calendar year or current financial year? Anyone? Just go by logic. Which one do you think is logical? Previous calendar year or the current financial year? Anyone?
Current financial year.
Yeah, thank you. It's actually current financial year, but previously, before the amendment, it said previous calendar year, which was maybe a loophole, as maybe sir said. So they have corrected it, and it says current financial year after the amendment. Okay, now I come to section 188. Changes with regards to related party transactions. 2 major amendments, relief to closely held companies and expands the definition. In case of approval for related party transactions, before the amendment, 75% approval from non-interested shareholders would be required. But after the amendment, this requirement has been relaxed for closely held companies. A closely held company is one where 90% shareholders are promoters. I'll give you a small example. Say there is a company, only 2 shareholders, husband and wife. A company where there are only 2 shareholders, husband and wife. In that case, before the amendment, it was not possible, I can say it was not practically possible to approve the related party transactions. So now, to address that difficulty, the restriction has been relaxed for such type of companies. Okay.
Just for adding on, before the amendment, if let us say husband and wife were the directors of a company. Her question was, it was just not possible to pass a resolution. It was just one way it was possible, that is they have to divorce.
Because I have actually seen a company where there are only husband and wife. One hotel in my place, only husband and wife. So I could relate to it. Okay. So coming to the definition, the word company has been replaced with body corporate under the related party definition of related party. So all the Indian companies, foreign companies are also covered, and also LLPs, trusts and registered societies are also covered under the definition. One more addition is that even investing or venture companies included under the definition. Previously it was only associate companies. Now it says even if there is a company which makes investment, in that case also it will be a related party. Coming to meeting of board and its powers, that is chapter 12. Okay, this is a picture of AGM. Okay, there has been two major changes, AGM and EGM. In case of unlisted companies, AGM can now be held anywhere in India. Andaman and Nicobar, Sikkim, Shillong, Meghalaya, Udupi, Mangalore, or Bangalore also, yeah. So, before the amendment it said, AGM should be held in the Registrar Office or in the city, town or village where the Registrar Office is located. Now it says, for unlisted companies, I underline, for unlisted companies, it can be held anywhere in India. And for companies, in which case the shareholder is a 100% body, overseas body corporate. Say for example, you have Walt Disney USA and it has a subsidiary in India, Disney India Limited. In that case, it's a wholly owned subsidiary, right? So in that case, EGM can be held outside India too. This is after the amendment. Before the amendment, it was not there. So if the shareholder approves, if Walt Disney approves, then the EGM of Disney India Limited can be held in USA or any other country too, outside India too. Coming to meeting of board of directors, technology, it is the era of technology, right? Technology is ruling our lives. So, when you conduct board meetings, directors could participate through video conferencing. But there were some prohibited matters which could not be dealt with. Say for example, approval of financial statements or approval of a transaction of merger. Now it says, after the amendment, prohibited matters can also be dealt with if there is a physical quorum and if any other director wants to participate through video conferencing. Now I'll just give you a brief of managerial remuneration, how much the company can pay out of its profits to whole-time director or manager. So before the amendment it said, if you want to pay something more than the specified limit, so here is a table which have made for the percentage of profit you could pay as managerial remuneration before the amendment. So if you want to pay something extra with something more, if you want to increase the individual limits or if you want to pay more than 11%, you would require approval in the general meeting plus central government approval. There were two conditions, approval in the meeting plus central government approval. Now, after the amendment it says, approval of central government has been done away with. Very easy, isn't it? Relaxation for companies. But if it wants to increase the individual limits, say for example in the table from 5% to 8% or from 1% to 3%, in that case, special resolution would be required. Okay, you would say, after the amendment, the companies can pay 60% or 45% of the profits to manager. Will it not affect the investor interest? So there are two proper safeguards. One is the special resolution, and one more very strong safeguard is that if there is a default in payment to secured creditors or banks or financial institutions, in that case, prior approval of the creditors would be required if you want to pay remuneration in excess of the limit. And there are additional responsibilities for auditor too, more burden for us. Before the remuneration aspects, how much is paid, how much payment is in excess of the limits would be required to be given in the CARO. But now it says you have to give it in the main audit report too. Here is a small issue. Which resolution would be required for payment of managerial remuneration in excess of 11%? Is it the ordinary resolution or special resolution? Yes, thank you, audience. It is special resolution because if you want to increase the total remuneration payable more than 11%, then it's obvious that you have to increase the individual limits too. So it indirectly implies that special resolution would be required if you want to pay managerial remuneration in excess of 11%. I would say Companies Amendment Act 2017 is definitely a welcome move. Can you think of any act in India which has seen no amendment or no change in its implementation and working? Quite impossible, isn't it? So every act needs some revamp and changes from time to time. So this Amendment Act 2017 is definitely a gift for companies. It will help them increase their corporate governance, help in ease of doing business, protect investor interest, and abide by stricter provisions in some areas and attain flexibility in some other areas. Thank you. Thank you for being a wonderful audience.
Thank you, Shreya. No wonder you find a lot of Udupi influences coming to Bangalore now. That's very good. Thank you, very well presented. And thanks for going around because he was trying to sleep, so we ensured that he was awake, right? That's good. That's very good. So I'll ask, no, you can start off. Yeah, you take. Yes. Just for you to understand, from the provisions of, by the time he said sit up, as far as all these amendments what Shreya spoke about, is for you to understand that these amendments were done to make things more easier. There's something called as ease of doing business. When she spoke about things like AGM, before you had to hold it where the Registrar Office is situated or within the city of the Registrar Office. Now you're telling you can have it anywhere in India. For EGMs, when there is a foreign influence, then you can have it even abroad. So you're talking about ease of doing business. Video conferencing, even for those items which were called as restricted items, now you can also be participating as long as quorum is still available. So just talking about ease of doing business is the main amendment that has happened there. Thank you.
Fine.
Yeah.
Boom, boom, friends. Good evening, friends. I can understand I'm the last speaker, so probably we had a very great session since morning talking on the taxation, on the income tax. So I'm the last speaker and the last batsman, so a tail-ender. So we had a triple century from Vijay Raja sir, a double century from the morning sessions. So let me try to do my end on the topic of the corporate law. Friends, this slide
But without the climax, the match will not have a result. So, climax is what? Yeah. So, even in movies, you don't watch the movie in the beginning and walk out without knowing the climax, unless it is Bahubali. because there's another part coming soon. So climax is important. Yeah.
Yes. So this slide, boom, boom from professional friends. So let me introduce myself. Myself, Ritvik from the city of Chota Mumbai, Indore, has come down here to interact with you on the topic of critical changes in the corporate law. Friends, I am really very glad that this has been a wonderful audience of around close to 1,500. I have spoken in various forums across the country in the Central Council, in the Central region, in the Northern region, in the East, as well as the West in different locations, Gurugram, or in Chennai, in Kochi, as well as in Bhubaneswar as well. So I think this is one of the best audience I had, and a big round of applause for all of you. 1,500, big number. And I'm very happy that the Bangalore branch of SIRC, with the young, passionate leadership of our Shravan sir, and also the SIRC chairman and the SICASA chairman as well, I'm very thankful to each one of you for giving me an opportunity to speak on the topic and share my views. Friends, since morning, I'll tell you the word why boom boom has been used. The reason is, everybody has been talking on the aspects, like GST is this, there's income tax, there's what. But I'm going to share you some practical aspects. If you spend around next 15 minutes, just pay the next 900 seconds. If you just pay a little attention, you can make big money. Because we chartered accountants are being paid for the reason because we have the analytical mind. It's not because you know how to file a return. It is you know because how can you ensure that the client doesn't lose? Because we are giving him the kind of an advisory. We chartered accountants are the practical advisors for the clients, and that's why we have been paid big fees. So let's see the various areas, So what was the background? Why we got this, Companies Act? 3 main reasons, friends. I'll walk you down through the presentation. So we had this in 2016 with the Lok Sabha. It took decades, it took a lot of time, then it went to the Rajya Sabha, then it went to the Parliament, and somewhere late in the month of January 2018, after a long of discussion, going from the standard financial committees there, and then again getting back because they're not happy, a lot of issues were trying to be addressed by the industry. Big companies, CFOs, meetings were being held with the Ministry of the Corporate Affairs, with the RDs, etc. They tried to come to some consensus because, they are not happy. I think if you have been seeing 2013, the act has come when the Ministry of Corporate Affairs, the ministry which was being run by Sachin Pilot. Sachin Pilot was one, right? Yeah. So who is the Deputy CM of Rajasthan for now? So, friends, so when it has come, there's a lot of resistance. People are not able to, they're banging their head, very critical, very complicated. You do something, they'll put you into prison. You find something wrong, it was totally, all the professionals were like, ek moka mil raha hai, main goli maar dunga unko. So this was the mindset what people had. If I get a chance, I'll kill them. So friends, how many of you know Telugu here? Anybody from Telugu here? Telugu arda ho to andar ki? Pawan Kalyan, huh? Okay. Like Sandeep Kicha, right? Sudeep, Sudeep Kicha. Okay, Pawan Kalyan and Sudeep Kicha. Come on, let's take it further. Come on. So let's focus first. I'll keep on telling you more anecdotes so that you don't lose the mood, because we are almost in the end, so you should be carrying something home. So let me try to keep you engaged so that you don't lose the focus. Yes, friends. So with this Companies Act, it has come in 2013. Then again, it had come with more amendments, and again June 15. Now again. So why do we keep getting a lot of amendments and amendments? Friends, one way, this is for us to make more money. You find something coming new, you get skilled up, you're geared, you can ask for more clients. You can ask more money from the clients, more billing hours, big money. That's what you want to do. So whenever you find an amendment or when there's something new going to happen, it is you as a professional must try to get geared up, and once it is being enforced, get ready for a sixer. And this sixer will be paid you in terms of big money. So I would say, friends, it doesn't need a qualification. If you have the knowledge in mind, you can talk to different people, Because when I was pursuing my articleship, I was being paid around, I was working on assignment for 6 hours, and they paid me around $300 for 6 hours. $300 for 6 hours just for working for an assignment. So believe, friends, it is not your qualification at times, it was also your knowledge. And this was being given by my firm or the company is just working with. And it is always important you get equipped with the lead-in skills or what is happening, try to be familiar as well. In India, we have around 18 lakh companies with the MC which has been registered, a recent data around 3 days back which has come up. So, and around only 62 companies have been active, which means around the rest are inactive. So try, friends, try to explore your resources, understand, read the laws, circulars, rules. If you are equipped, it means you have the wealth. And with the wealth, you can get richer. As you know, wealth was being spoken in the morning hours, so I'll not talk much. So this is the background was such, they were, different. The company law committee felt that, there are major areas which we wanted some clarity. Like, my co-speaker has, spoken on one of the major, areas like Section 185, loans to directors, 188, related party transactions, 177 audit committees, 139 auditor directors, etc. And, when you go into the last, you had something on the winding up, insolvency, etc. A lot of changes, when you have this knowledge, you'll understand, so where can you capitalize it? So 93 sections have been put up, friends, so I'll cover the main areas which were not being discussed so that you don't feel the moratorium. Firm registrations, in terms of incorporations, I'll cover what are the basic rules which have come out and what are the changes. In terms of the business administrations relating to the annual general meetings, the EGMs, etc., the filings, sections few were which being removed, omitted, etc. Then we have our own bread, accounts, audits, the ratification relating to the auditors or the qualifications, disqualifications. And my favorite area is money, managerial remuneration, she has touched upon, but I'll try to, if the time permits, I'll give you a different perspective, how practically, I have been manipulating, I would say, how we have been manipulating the whole sections and, we are trying to help. 5 areas, friends, which I would like to address from a different perspective because I like the whole session to be a little analytical, I don't want this to be kind of a session where I'm preaching you something, you want to listen. So this has to be a little interactive and mainly analytical because our main should be trained once you clear your CAs, it is an open war battle. So try to gear up before you're being qualified. Once you qualify, it's a battle which you have to run and get the clients. So try to gear up. So I'm covering it from a more practical aspect. So one is in terms of contingent, one is in terms of the compliances, how they have been cut down, we will see that. Next is in terms of ease of doing business, we had some speaker covering the sections of, the ease of doing business rankings, improving in India under the current Prime Minister regime. And then we had, how things have been harmonized all together, the SEBI, the accounting standards, and the RBI. And few areas where they felt, omission is being required and where they have omitted because it will make our lives easier. But at the other side is, we may not get more money again. And the miscellaneous provisions here and there, so we'll just try to cover up on them. Stringent provisions. Friends, I think a lot of people might be doing the incorporation activities at your office, like INC1 earlier, then you had the SPICE forms, then you had this run coming up for 9 availabilities. So earlier it had around 60 days of times, and I remember very well one of my time, a friend of mine wanted to apply a name, and because I had some kind of an Kopam, what do you call in Kannada, I don't know. So I had some kind of revenge on that guy. So I filed the name so that, his client doesn't get the name. And he had to wait for 60 days because, once it is being filed from my login, he cannot apply for it. But now, friends, it has been removed. They felt this is all nonsense. Let's cut it down 20 days for the sake of an administration clarification. Next, we had the Registrar Office. So, my friends, this is a little extension of what we have, or I would say it's a little benefit which has been passed on. So earlier when you have a Registrar Office, you're supposed to file the concern confirming that there's your office within 15 days. Now they felt this is becoming a little tight because you may not be able to get the franking done, or you may not get the utility bills. They thought, let's give another 15 days of time so companies comply and they don't need to pay more fines. Next one, what happens when the company is being doing business without complying to the basic norms of a private limited or a limited company. So we have the requirements of 2 and 7, which is the minimum number of members which a company needs to have. And let's say you do business for more than 6 months, and you know the fact that the company is not being complying, then every member of the company who has subscribed to the MOE will be held liable jointly for the irresponsibility, what they have been knowing, and for the recklessness. So this is a very major amendment because, we might be seeing a few companies where, some kind of an issues, the directors might have retired from their job, or they may have quit without appointing somebody else. So this aspect was being put in so that, at least every company complies and the shell companies might come down.
Just to clarify there, if you see the first one about name reservations, we reduced it from 60 days to 20 days because what used to happen was a client comes to you saying that we want to incorporate a company, that's why you ask for a name. If you just want to get a name and then wait for it and then do something else, we feel that means you're not really serious about starting a company right now. So we don't find a need to say that why you want to wait for 60 days and then incorporate. You rather decide right now and decide to incorporate a company right now. Because if you've seen the US style, we go for one-day incorporations. It all happens in 24 hours. So they said, let's start reducing the time. If you're really serious about starting a company, let's go for it. Whereas the second one is concerned regarding registered office, what happened was it was only a clash between compliance and the law. The law always said, I'll give you 30 days time to have your registered office. But you have to file with the ROC within 15 days. Now that became a problem because you're telling I can have my office in 30 days, but you have to inform ROC in 15 days. And that was not possible. So we changed the law and make it uniform, telling that both can be now 30 days. So you can have your company in 30 days and filing also can happen within the same 30 days. Therefore, just to bring in that uniformity between the two, it was added. And as far as Section 3A is concerned, 3A was already there under the 1956 Act in the form of Section 45, wherein if the number of members reduces below 7 and 2, then automatically the members who are liable will have unlimited liability. That was already there in 56, but they removed it in 2013. They said, let us bring it back again. And therefore, it was not there in 2013 law, and that's what he is telling you, that it got again reintroduced into the Companies Act. That means the 1956 provisions are slowly coming back into 2013. Yeah, please.
So next, etc. So, we used to do the normal process for the associate companies. Per se was not there into the definition as such, but probably when we used to do the equity, if any of a lot of your friends might have been working in articleship, you might have done the consolidation, or in case of your same final, you'll be reading it a little in detail. So you might have seen that, subsidiary companies was being included, and you used to prepare the consolidated financial statements, salient features, blah, 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 etc. But, the associate, the word associate has somehow been not being introduced yet, but though it was being practically emphasized, or it has been practically being doing. So they felt, let us, add this out because this has been missing. So that was one of the points in section 129. Next comes the board report. So which is predominantly, we might be seeing good number of changes here. So friends, earlier, when Shreya covered on the topic of KMP, so earlier, the financial statements before being approved, they were supposed to be signed, right? So I think it was supposed to be signed. So there what happened, the CEO was not he needs to be signed only if it has been approved by the board. So, but going by the, the realities, or probably what we see the totalities, what we know substance or form. So it has been felt, CEO is the one who actually drives the ship, if you call the company a ship. He's the one actually who leads the team. So why don't we consider him under the definition, by default he should be signing it. So what is the whole concept of, approving, not approving? They felt, no, I think this is, we are not able to get the real consent of the interpretation, what it was being meant. And they have modified saying, CEO has to mandatorily sign it whether he's a director or not. And next, it was a little complaints, so when we have been working on the listed companies, you might have seen the annual report used to have a, the director's report used to be, per se include again. So this was increasing the size of the annual reports and etc. So they felt, I think if you might have read the annual report of the Reliance, it goes around to 450 pages. And for Tech Mahindra, it's around 290, 300. So they felt, who reads these books? It is predominantly waste of resources. Nobody reads it. Or even if they put it in the website, it is not working out. So they felt, let us remove the complexity, what is being found, and let's try to make it a user-friendly so that everybody reads it. Because that is the intention when you prepare a report. It is intended to be read by the intended users. As not, it is a scrap. So they were trying to emphasize so that, the stakeholders ensure that they get the benefit. So this was one point from the annual returns perspective. And next, in the listed companies, we had another concept of the evaluation of directors. So this was in terms of the nomination NRC, the Nomination and Remuneration Committee under section 178 with the meetings, what she has been discussing. And, again, we had another provision with board report. So they have tried to streamline things and harmonize so that, this goes in sync with it. So how do you do the formal evaluation of the independent directors, non-independent directors, executive directors, non-executive directors, what is the policy which has to be mentioned? So the remuneration policy per now, say, would be put in there. So friends, anybody knows, if you have seen or if you have been working around, does anybody have any client which is into the film industry here? Anyone who has worked with any clients? Nobody? I actually got, an opportunity working with Allu Arjun. So anybody knows Allu Arjun? Oh. So I was supposed to meet Pawan Kalyan because he was coming for office for some signing. So the actor Allu Arjun actually is a partner in more than 15 companies. So if you get any chance, you can just check out what are all the companies, he's a part of. So friends, you will have to use this, when you know things, it is better you know how they have been there. So everybody has business. I think even Sudeep might be involved here. So anybody has a chance to check it out, you can know how much money he makes, etc. This is open for you to check. Next, reopening of accounts. So friends, this section 130 has come at the time of Satyam because, when the board of Satyam, they were restructuring it, different people have come up. So they were supposed to reopen the whole, defalcated or the cooked up accounts. So then, using that as a base. So for identifying the fraud companies, section 130 has been modified saying that there was no time limit. So as per the Income Tax Act, we had some 8 years of time, say you are supposed to maintain books. But as per the reopening, there was no time limit as to how many years should you maintain the books. So they felt 8 years has to be maintained unless until the central government says you will have to maintain for a little more longer. So this is the clarity from the company's perspective so that they can reduce the redundancy of maintaining the older books. Corporate social responsibility, a very minor change in terms of the interpretation of the definition, So what is the applicability? They felt, they were using the financial year. It was not being very clear, though, when you read the publications of the Big Fours and the other well-known firms, so there it was clearly being interpreted, in the right way. So they felt this is an area which doesn't have the clarity, so let's emphasize what, people get the understanding. Auditors, our role, what we see is our, so ratification. So I think when your people have been working, there was a rule or there's a kind of a small technicality, I would say, in terms of the language when it has been drafted. So where, one section says, if the auditor ratification is not being completed, it is deemed that he is being resigned or he has been removed. And the other says, no, there's not an issue. You can, even if you don't ratify, it doesn't have an issue because you have been appointed for 5 years. So, there's not much clarity as to how should we really interpret and what is the intention of law. So this section of 140, the ratification, the whole intention was to ensure, the auditor who has been appointed for a period of 5 years, we don't need to again, ratify him every year. So once it's being appointed, it is being taken care. So this process of ratification has been removed. So from the complaint side, I think it has been taken care. Yeah, and another senior, what I've read was, big companies like Tata's and Reliance, they were following this practice for quite some time, where, ratification was not being used predominantly. Annual reports, the financial circulations, I'll speed up a little bit. So in terms of the financials, circulations, should we send it? What happens if we don't send within 21 days? So will there be issues, etc.? For the listed companies, it has been said that if you just put it in the website, that is okay. And in terms of the Amendment Act says, the financial statements which, companies where the ratification, if you get from the 95% of the members, if they approve in principle saying that, we don't have any issues, that should be fine. Focus on the foreign subsidiaries, I think she has covered a little bit, where the foreign subsidiaries can hold their meetings anywhere across the globe, if it is provided it is an wholly owned subsidiary. But here the aspect is mainly in terms of the submission of the accounts. Let's say I hold a company in Mauritius, where let's say I assume I'm a director there. So should I, if I hold a parent company in India, so what is the case of I submitting the accounts there? So should I submit these accounts to my shareholders as well, irrespective of whether they have been audited or not? So this was one aspect which has been emphasized. So because I have been working a couple of foreign companies, let's say in Cayman and as well as Mauritius. So we had this challenge of not avoiding or not sharing of things. So I felt, I think this is a good change the stakeholders will be knowing about. Ease of doing business. Incorporation times, you don't need to go to the stamp vendor for getting the declarations, for the affidavits, I would say, and just get a direct declaration, file with the company, you're done. I'll skip. Disclosures in terms of the registrars. So earlier, I think now the harmonizing policy has come up where, wherever the SEBI or the SCRA, the Security Contract Regulation Act speaks up, those sections have been totally being eliminated or they have been totally widened out. And their emphasis, their reference has been given down to the Companies Act. The sections are no more applicable. Like we had the prohibition of insider trading 194, 195, or the forward contracts, etc. And as well as the disclosure of the information to the SEBI. So those sections are no more relevant. I think that has been removed up. Video conferencing she has covered, so I'll not touch upon that. Allotment of dividends is taken here, 185. Yes, friends. I think when the Companies Act has come up in 2013, so my first presentation in the Central Council, in the Central India CIRC, so I spoke on this topic of Section 185. So there it was totally rigid, very complicated. We were facing the issues, how should we structure. So we were forced to use a lot of loopholes into the act, allowing people who don't form part of it, and we have structured it. But somehow it is good that she has covered it, and probably now we have some clarity. It should be taken care well. So friends, there's another point which I would like to cover and sum it up for today. That's on the significant benefit, the SBOs, the beneficiaries. So let's say, there are 3 companies, A is being held by B, B is being held by C, which has the real intent, let's say Mr. Y and X in this scenario here. So we were trying to emphasize as to who is really the owner of the company. So is it being run by some kind of an elite or the, non-social organizations, or who are the real owners? So this has been trying to push up, and the whole section has been drafted very well. So, the companies, as far as the India, in the country as a whole, and the regulator has an idea as to who are those people who are infusing funds into the company, or at least who are those entities who are running the business. So this was being the focus here, and we have tried to bring up a few areas. Let's say, the amendments, the definition of the beneficial interest has been totally being emphasized with the right words.
These provisions are not yet effective, so I think we can skip that.
Sure. Yeah, so deal on the, when she spoke on the managerial remunerations, friends, so a lot of independent directors, so when you see the ground reality, a lot of people are just being appointed on the namesake, but they are the real rich people. So the whole impact of, or the real intention of having the independent directors was not being served. So I think if you see, even I think the current ICA chairman as well is a part of the audit committee right now, Mr. CEO Uttam Prakash Agarwal sir, so he's a part of the Yes Bank's audit committee right now. So a lot of people, are really being there for the real intent, but at a lot of times, it has been misused. The real intention of having the independence, the owner's responsibility was not being done. Foreign companies I'll not touch upon because we don't have the time for today, but I'll give you a brief insight, in terms of the coverage, where the changes have been done. It is in terms of, defining what are those foreign companies which don't need to comply with the registration in India, because it was being felt a lot of companies, just by meeting the definition criteria, they were being forced to get complied into India. So I think that has been eliminated now that has been now removed to ensure that, every company doesn't need to comply. E-filing of fees, sir has covered, so I'll not touch upon that. But I think, yes, a lot of areas have been touched upon where the filing requirement per se has been neutralized because it is being felt. A lot of fines are being put up. So the whole intention of, floating of companies is or having a private limited is becoming an expensive affair. So penalties have been, reduced to a great level and they have been streamlined. So companies, even for a small offenses, they don't need to end up paying huge penalties. Private placement is another section which is very well totally drafted in terms of totally easing out things, because I've been working for a private equity fund where we used to have a lot of issues in terms of the private placements, issuing letters, getting consents. So that has totally been streamlined. But I think when you get this time, probably you can read every section, like major section, section 42, section 62, etc., etc. I'll skip this, friends, because it's lost. So friends, on a conclusion note, I can tell that probably India incorporation per se is heading into a India per se is going into the right direction. But yes, on one front we can find that the compliance has been streamlined and the penalties have been cut down. So I think let's hope that the country is driving into the right direction. And I hope, I just got some time, so, I was a little busy and I tried to do my level best within the time what I've got. Thank you one and all for giving me this time. I understand that probably things were not so great, but yes, it's really a good opportunity for me to talk to you all and interact. And I'm glad that probably I got an opportunity to meet the most vibrant and Bahubali of our Bangalore ICI, Vijay Raja sir. So I'm great and thank you very much. Jai Hind.
Just to conclude the last part of it, I know that the sessions actually got a little bit dragged off right from the beginning, so I understand. Some of you have already made your appointments, and therefore for you every 10 minutes, 15 minutes makes a difference. So we'll just try to. So I'm very happy for both the speakers because they brought in a little bit of a change. They brought in a little bit of interactions, and that's so nice of you to do that. That's very good. Thank you so much. Shreya had a lot of energy in what she was speaking, and Ritvik seems to be already a full-time businessman, right? Yeah. Close to Bombay? Close to Bombay? Indore. Indore is close to Bombay. So, yeah, nearby. So, that is why money comes all the time as a priority. How to do business, because it's the business capital of India, is very close by there. So, well presented. Thank you so much, both of you, for doing a fabulous job. But then we also knew that we can't keep you retained with everything, because there's a lot of things that has happened in company law. It's not something which we can do it in just like this. But what I wanted to understand is, you're not sitting here to understand whether every point of it is clear. You're here to understand at a macro level, saying that, okay, I do get this point now, that there seems to be some changes in directors. I understand there seems to be some changes in this aspect. I also understand that technology is playing a very big role today, and tomorrow is not easy to escape and avoid. Like what Ritvik was saying, it's not going to be easy in future, wherein you want to avoid certain things, which obviously means from director's perspective, when they know they can't avoid things, then they have to take help. And the only person who can help you is currently the profession what we are into. And that is why it becomes so important for you to be aware about what the amendments are. So once you are aware, when they come and ask you for an advice, you should be well equipped to answer them. And very good job by Shreya. Thanks a lot. So round of applause to both of them. Right. Thank you so much for it. Very good. I will hand it over. So once again, you've been lovely. It was great meeting you all, but I will definitely ensure that next time we have a long session together. Shall we do that? Yeah, so we'll do it. Thank you so much for the opportunity. We'll just loved it, and I think it's not easy to arrange everybody in one place just like this. I think hats off to the organizing committee. So give them a round of applause for a fabulous job. Thank you. And you should also take this as an opportunity to ensure that you take participation in all aspects as possible. Very important, just don't be sitting there as an audience. From next time onwards, you should be always asking them, I want to do this, I want to do that, I want to be part of it, and that's how you actually grow. I'm sure that's how they've all grown to that level, because they've all been enthusiastic in being part of everything, and not just about academics, and not just about clients, not just about work. You need to get into all these areas. So just start asking them, saying that from now on we'll start doing a lot more things. So you should be this side, okay? Do that. All the very best. All the best.
I heard a lot of whistles being... I heard a lot of them whistle during the session, so why don't you do it now? Thank you. Thank you. Yes. Thank you, speakers, for such an intuitive session.
I presume all that whistles were for me, right? Right? Okay. Thank you. That's for me. Thank you. Thank you so much.
I requested the whistles for Sir, yes. Thank you, speakers, for such an intuitive session. In this era of rapid change, those who adapt to the changes are the ones who survive in the long run. And rest assured that we all have inculcated a lot from this session and are looking forward to apply them. We have an announcement. All the delegates are requested to vote for the best student speaker for day 1. So students,
I hope my name is there. No, not there? Oh, this is not right.
student speaker. So you're a guru, sir. Yes, so please, all the delegates, do vote for the best student speaker for day 1. And I request all the volunteers to move around and collect the same from them. On behalf of Bangalore branch of ICAI and Sikasa Bangalore, I thank the session chairman, CA Vijay Raja, for chairing this session and also for his precious time and effort for making this session very interesting. I thank student speakers Mr. Malampalli Ritvik and Ms. Shreya Shanoy for their priceless effort in making the session very fascinating. May I request Mr. Adarsh to present a memento to the session chairman as a token of our gratitude and respect. A huge round of applause, please. I request Mr. Adarsh to present a memento to the student speakers, Mr. Malampalli Ritvik and Ms. Shreya Shanoy, as a token of our appreciation. A bigger round of applause. This concludes the technical session. Thank you all. Over to Archana and Srivatsa.
We have collected 125 units of blood from this day. A big round of applause for all of you here, and thanks a lot for the persons who have donated. Thanks so much.
Wanna be a rank holder? Wanna be a rank holder? Need to know key success factors? Yes. Wanna be a public speaker? Yes. So please do attend tomorrow's session by Film Director, Sahitya Academy Awardee, CA Endamuri Virendranath. We do have breakfast tomorrow. Please be here at 8:30 and enjoy the breakfast.